Hello, everyone. Welcome back. Welcome to another edition of On My Mind. So much going on. It's just a crazy world we live in, isn't it? Well, we have to start with the war. This is now looking like an endless war, let's face it. No matter how much the administration, other people might say the war is going to end, I don't see any incentive for either party to just walk away. And so it's going to drag on. My prediction that I made 2 months ago that it'll ultimately end with people having to pay a tolling fee permanently in the Straits of Hormuz. I think that's definitely going to be the way it's going to be. There's obviously another theater opening up in the Red Sea. It really doesn't impact gas that much, but obviously it impacts oil prices. And when oil prices go up, gas prices go up. If I look at most of the media, they seem to focus on the impact on oil and how, there's other alternative pipelines being built for oil to be transported away from the Gulf into Syria and into Turkey and into obviously the Saudi pipeline. But I think that, the situation with oil is very different than the situation with gas. There are no real good options at this moment to move Qatari or UAE gas out of the region. UAE is talking about building an LNG plant in Fujairah. Let's be realistic. It's going to take 3 to 5 years, absolute minimum, and that's if they got started yesterday. So that's not so easy. The pipeline to Fujairah from the rest of from Abu Dhabi is quite far. Abu Dhabi is actually quite far from Fujairah. The Emirate of Dubai is in the way. It's not so easy to get right of ways through the Emirate of Dubai. It's very busy. So just it's not trivial at all for the UAEs to talk about exporting through the Gulf of Oman and avoiding the Straits. It's not going to happen anytime soon. Qatar has now extended its force majeure till October. It's going to go extend on. So guys that are dependent on the Middle East, they had a short term bandage. They thought they could, manage for a few weeks, a few months. Now it's looking like it's going to be a while. I think the scenario planners in every company, every gas consumer out there should start thinking of the fact that Persian Gulf is going to be severely restricted. The gas the LNG coming out of the Persian Gulf, Qatar and Abu Dhabi. Expansion of the Qatar is going to be delayed indefinitely. So now we're talking about the existing 70 something tons in 77 tons in Qatar and 20 million tons or whatever it is in Abu Dhabi. Ruwais is going to take a while. Obviously they're going to work very fast, but that's not going to help because Ruwais is on the other side of the Gulf. So if you're dependent on that Middle East supply, you better expect that you better have different scenarios in mind. And again, if the Straits, the Red Sea is also closed, we will see oil prices rise dramatically. The last couple of days, Saudi tankers have been shut in and not allowed in. If oil prices rise dramatically, gas prices are going to rise dramatically. And maybe, this is the catalyst I've been talking about forever, which is that the world has to really realize that LNG is going to cost more than it did in the past. I'm still meeting buyers out there who think that LNG should cost, US Henry Hub plus 115 plus $2 or $3 and then delivered. Those days are over, my friend. Oil prices is not going to come back down till this thing is resolved, and oil prices determine 70% of the world's gas price. And the world's gas is severely curtailed. Quarter of the world's gas is gone. It may not come back in any kind of dependable fashion. And if you're running a power station in Thailand, you need dependable gas. And if you cannot get that dependence, that confidence from Qatar, you're going to start buying spot cargoes. And unfortunately, you're going to buy them off the open market, which is already very tight. And guess what? Guess who's going to get squeezed in all of this? It's the Europeans. This is the perfect storm we are now facing for Europe. Europe is facing a very hot winter, a hot summer, and thus, there was an air conditioning demand, another demand that they probably didn't expect. Winter gas inventories are at record lows because the price is still not conducive to people filling up on today's prices, because the price in the winter is less than today, which I think is very short-lived. I think that price is going to correct itself very, very quickly. We are probably, if Russian gas is supposed to stop by the end of this year. So where is Europe going to get its gas from? It was very dependent on Middle Eastern gas, Qatar in particular, maybe a little bit in the UAE. That's going to shut in, or it will be not dependable. Russian gas is supposed to stop. I don't know if it will or not. There's debate. Inventories are very low, so everybody's going to be scrambling at the same time in the next few months to fill their inventories. And if you're hoping to buy spot cargoes, you're competing against the Thai refiner or the Thai power plant who wants to get dependable gas that he can't get anymore, and the Pakistanis and everybody else. So there's not a lot of spot cargoes out there for you to buy. So you Europeans better start making deals with the Americans, because the Americans give you the most solid way to get gas without heavily competing against the Asians. If you're trying to buy gas from anywhere else, the Asians are going to probably try to outbid you. If you're trying to buy gas from Nigeria or anything else in Africa or Yemen, or not Yemen, I guess, or Oman, other that gas supply, the Asians are going to try to beat you every time. And the ships, I can just imagine just trying to be a ship owner right now. Your ships are all over the place. Your crews are all over the place. You don't know if they can get in or out. And so a lot of ship guys are going to say, I just don't want to deal with the Middle East trade. They're going to walk away. They're going to deal with, taking Gulf gas to the US. It's much more dependable. They can't afford for their ships to be sitting around outside the Straits or outside the Red Sea. So this is going to be a mess. And unfortunately, I think the Europeans are going to suffer the most. So if I was a European buyer right now, I would be scrambling to lock up supplies for the rest of the year, because that competition is going to get much more severe if this war extends, and I think it will. Oil prices will go up, gas prices will go up, people will be scrambling all over the world for natural gas, and there's not going to be a lot of gas available, especially with a quarter of the world gas gone. So a perfect storm. I want to talk a little bit about biases in our industry. It still amazes me, and this came up just like in a conversation last week. I was talking with a Japanese entity. Literally, the Japanese and the Koreans, in a limited extent, and most of the other Asians, are extremely risk averse and brand centric. They look at independent LNG suppliers and they say, you're not Shell, you're not Exxon, you're not Total, you're not Eni. I can't really trust you. I can't talk to you, and I shouldn't talk to you. And that has to change. If you look at the projects that have reached FID recently, albeit in the US, Commonwealth, Delphine, potentially Texas LNG coming up next decade, all of these are independent producers that are not Shell, are not Exxon, are not Mobil, are not Eni, they're not Total. And if you, Mr. Asian buyer, wants to sit by the sidelines because you don't take us seriously, well, you're going to lose out, because the Europeans are taking us seriously. Most of that gas is going to Europe. Obviously, geographic things helps. But I'm trying to sell investors to my Gulf Stream project, and Asian buyers just, they go through, we have these meetings, we talk, but at the end of the day, it comes down to, well, you're not Shell, so I can't really trust you. Well, I'm glad I'm not Shell. Shell, every Shell LNG project out there is, comes in at 5x of project of capex. Shell Canada being an exception, that was actually quite a successful project. But previous to that, you look at Prelude and you look at some of the other Sakhalin and all these other projects, they were disasters. But here, we're not here to rag Shell or Exxon or anybody else. I just think that, it's time that we independents get a bit of respect. And it's nice to see, like in the Bahamas, the guys that have just got FID for their receiving terminal were independents. They got Shell in at the very end, but they're independents. And so we independents are actually a major force in the industry, and we're going to be an increasing force. Every drop of American LNG, with the exception of a little bit from Sempra, maybe 10% of the American LNG is from Sempra, drops from Golden Pass, because that's still not going in big flows yet. Every other drop, so let's just say 85% of American LNG, which is 100 million tons, is produced by companies that were independents. Cheniere was an independent. Venture Global was independent, a couple of guys. Texas LNG was, me and as an independent. Next Decade, all of these are independent companies. And I just feel that the Asian bias, again, and the Middle East as well, in some ways, the bias against these, independent companies is actually going to hurt them because they felt, oh, we have to buy from Qatar, we have to buy from Shell. Well, good, go right ahead. And when your supplier drops out 25% of the world supply, you better start taking the rest of us seriously. Because I guess what I'm trying to say is the Europeans take us seriously. I don't think the Asians do. And I think that really is a cultural bias. I worked in the Middle East. I know that, when we were looking at investments, and unless it was a brand name, we didn't want to invest. And I'm feeling the same way now, trying to raise money. I was in Dubai last week or 2 weeks ago talking to people. And, yes, we have interesting conversations, but at the end of the day, it comes down to I'm not a brand name, so why could I trust you? So I guess we'll leave it at that. FID, I hope Texas gets to FID very soon. You've seen that notice to proceed. You've seen that they raised another 500 million. They've also made another offtake agreement. So as soon as Texas gets to FID, I'll be one of the 5 people in the world that's brought an LNG project to fruition. I hope that helps me raising money for Gulfstream. Gulfstream is we're moving ahead. We've gone through the whole permitting system. Still looking for funding. It's been a bit tougher than I would have expected, but we're out there talking to lots and lots of interesting people. First guy get to the table wins. I'll end with download my app. The Gas Units app is fantastic. I've got great feedback. It's on the iPhone store. I don't know why Google hasn't accepted it yet for the Play Store, but any day now. And it's also on our gulfstream.lng.com website. So do get the app. It's completely free, converts 95 gas units, including rates and prices and volumes. And there's no registration, no ads, no nothing. It's our public service. So let's do that. So I guess the next time I talk to you in a few weeks from now, is the war still going to continue? Is it going to be the same situation? I think so. I hope I'm wrong, but I think it's going to be the same. And I think if I was a European buyer, I would be scrambling and getting gas, and I would be talking to potential projects like ours to secure gas in the future because the competition is going to be more intense. Thanks. Hope you enjoyed that.